I want to first of all get your thoughts on the trend we're seeing these days in our markets. We've said it all over the last few weeks. This is really a month to Christmas, so a lot of people waiting on the sidelines, very little activity on our markets. Today we saw total value traded at 1.5 billion naira, a very low figure compared to where we were about a month ago.
Thank you very much, Wole. I am happy to be with you today on your program. Just like you mentioned, the thousand points for quite
All right.
a while.
Unfortunately, we're not getting the audio from the NSC. David, can you hear me now?
Yeah. I hear you perfectly well, but can't you hear me? Can you hear me now?
I think we have you back. Yeah, go ahead.
Okay, thank you. Just like I mentioned, the all-share index of the Nigerian Stock Exchange has for quite a while stabilized around a dynamic point of equilibrium at about 26,000 points. Today, the index gained a little bit, appreciating by about 0.15%. Apparently, in this time of the year, as we grind gradually towards the festivities of the Christmas holiday and also the New Year, from historical trend, the market winds down gradually. But I perceive that for the intervention of market makers, we are able to have a market which is not in decline, but rather has settled at a position of dynamic equilibrium. So that is the situation in the market. But you also mentioned earlier on, Wole, that the Naira appears to be firming up in the foreign exchange market. That is a positive news for the equities market.
All right, you're making a point that the market makers are definitely contributing to the stability we're seeing right now. So in other words, it could be worse. So in this context, how does one invest across the market? Which stocks do you like at this time? And considering the fact that we probably won't see this market really take off till early next year?
Generally, this period of the year is regarded as a buying period, because most stocks are expected to decline significantly as a number of investors divest to raise funds for various purposes. However, there are some stocks that pose special attraction. I would endorse stocks that have a PE ratio, third quarter PE ratios that are below 10 right now. And a number of such stocks are distributed in the banking sector, also in the agricultural sector of the market. Some stocks, especially those that are of multinational companies that gathered, that became overheated.
I want to actually touch on that. You just mentioned some companies that, like you mentioned, are a bit overheated.
Market rally, it is not unlikely that we may witness some corrections in the prices of those stocks.
I really want to get to that point, David. David, which stocks do you think?
Year. But however, there is still a lot of value to be tapped in the stocks of the banks, and also stocks in the agricultural sector.
All right.
You know, so there are areas that one can derive some values and immediately start tapping into the opportunities as the market starts to weaken and the prices become more attractive.
All right, David, if you can hear me, I really wanted to get your thoughts on the companies that are likely to fall back at this time. Looking at the market today, we see Nigerian breweries up, Nestle up. So some of those multinational companies that a lot of people have been talking about have been somewhat overheated right now. Okay, I think we've lost that line to David right now, but hopefully we get it up in a bit. But just to stay with that point, we see the likes of Nestle Nigeria today up back over 600 naira. Nigerian breweries up to 140 naira. These are companies that quite a number of analysts, investors have said maybe a bit pricey at this time. Perhaps there is a premium on the fact that they are multinational companies. They are very liquid stocks. So it appears that those are stocks that a lot of people, to some extent, begin to feel it's time for a correction. David, hopefully we can get you back on the line. Okay, great. I was just going to get your thoughts on that point. I think you've made it to some extent. The fact that the likes of Nigerian Breweries and Nestle are companies that are probably going to fall back in this season.
Yes, I believe that during the rally, the last sustained rally we witnessed, a lot of those multinational stocks became overvalued. And along the line, during this period, it's not unlikely that there will be correction in the prices of those stocks. Analysts have identified Nestle, Nigerian Breweries, GlaxoSmith, Guinness, and so on and so forth as stocks that appear to be overvalued relatively when compared to the stocks of banks and also those in the food and beverages and agricultural sector. Some stocks in the banking sector are particularly very attractive. Skybank, for instance, as of last Friday, had a third quarter PE ratio of about 3. Fidelity Bank is also down with very low PE ratio, so as Access Bank. Okomo Oil, as of last Friday, had a PE ratio of 5. Nascon also had about 7. So one can actually identify high quality stocks that have low PE ratios that pose very wonderful opportunities for investors to tap into. So if, as we move gradually to the end of the year, the prices of those stocks are still declining, then nothing can be better than that for investors who are positioning to reap when the results the full year results start hitting the market from around March, April next year. But I see correction in a lot of those other multinational stocks.